Today, let's go over everything you need to know about TFSA accounts. Welcome back to my channel, where we talk about investing, personal finance, and dividends. Let's get started. TFSA stands for Tax-Free Savings Account. It's one of the registered investment accounts, and you do not have to pay any tax on the money that you make in this account. There is a limit to how much you can contribute to this account, and it increases every year. The TFSA program began back in 2009. If you are over the age of 18 anytime after 2009, you've accumulated some contribution room. The money that you contribute into your TFSA account is money that you've already paid tax on, so it does not affect your taxable income of the year or the taxes that you have to pay for the year. The money that you make in your TFSA account is tax-free, but there are some rules that we need to abide by, or we will get taxed on some or all the money that we make in our TFSA account. We will go through these in this video. You can open a TFSA account with any bank really, TD, Scotiabank, BMO, or any investment brokerage platform like Wealthsimple or Questrade. You need a valid SIN number in order to create a TFSA account. If you're a non-resident, you could still create a TFSA account, but in most cases, it's not worth it because you'll be paying 1% tax on the money contributed to your account every month. After you've opened your TFSA account, let's look at contributions. You can check the contribution on the CRA website under My Account Services. Every time you contribute to your TFSA account, your contribution room will decrease accordingly. Make sure you do not exceed your contribution room because similar to non-residents, you'll be paying 1% tax on the extra contributions that you made into your TFSA account. And you'll be paying that as long as the extra contributions stay in that account. You would think withdrawals from your TFSA account would work the same way as contributing to your TFSA account, right? But no. The withdrawals does not reduce the contribution for the current year. It'll only be added at the beginning of the following year. Now that we've looked at contributing and withdrawing, let's look at how to transfer a TFSA account from one financial institution to another. If the transfer is completed by the financial institution, then it does not have any effect on your contribution room. But if you were to manually withdraw the money from your existing TFSA account and contribute to your new TFSA account at a different institution, then it affects your contribution room. Basically, the money that you contribute to your TFSA account should not go over the contribution room, and the money that you withdraw from your TFSA account will only be added the following year. Are you confused yet? 'Cause I am. So let's take a look at an example. Let's say you have an account with TD Bank and your contribution room left for the year is $3,000, which means you can contribute up to $3,000 this year. If you go over that, you would have to pay extra tax. And you have $5,000 in your TFSA account. For some reason, you wanted to take this money out, but it ended up that you didn't need this money. So you want to recontribute it back to your TFSA account. But you can't contribute all of the $5,000 because your contribute limit for the current year is only $3,000. So you can only contribute up to $3,000. For the next year, the contribution room is calculated by the new contribution increase set by the government added to your last year's withdrawals. So let's say the $5,000 is a contribution increase set by the government, and you withdrew $5,000 the previous year. So in total, you would have $10,000 to contribute for the next year. If you're considering transferring your TFSA account from one institution to another, there's usually a transfer fee or a closing fee that might be attributed to that. Some institutions may reimburse the fee depending on how much you transfer over. For example, Questrade offers fee rebates up to $150, doesn't matter how much you transfer over, while Wealthsimple offers fee rebates up to $150 only if you transfer over $5,000. Some other terms and conditions may also apply, so if you're sure you want to transfer, make sure you ask your new institution if they'll cover your fees for the transfer before you move your money. Now let's take a look at what happens if you lose money in your TFSA account. Any loss incurred in your TFSA account does not get added back to your contribution room. If you bought Tesla at $2,000 and sold at $1,000, the loss of $1,000 will not be added back to your contribution room. the $1,000 lost is just lost. Money that is invested in a foreign market may be subject to foreign withholding tax. With the TFSA account, there is no foreign withholding tax on capital gains, which is the appreciation in value of the stock, but there is foreign withholding tax for foreign dividends, and this percentage varies from country to country. For US specifically, it's 15%. You won't see any difference. The dividend amount that gets deposited into your account is money after deducting the foreign withholding tax. Yes, you do pay foreign withholding tax even if it's a Canadian ETF that holds stocks and ETFs in the foreign market. For example, a Canadian ETF that holds US S&P 500, like BMO's ZSP or Vanguard's VFV. So technically you are taxed a little on the money that you make in your TFSA account if you invest in the foreign market. So I suggest sticking with Canadian stocks and ETFs for your TFSA account for it to be completely tax-free. Or if you don't mind paying the 15% withholding tax for investing in the US market or the foreign market, you can make that call. It's better to hold foreign stocks and ETFs in your RRSP because we have something called the tax treaties. Again, the money that you make in this account is completely tax-free unless, number one, if you exceed your contribution room, in which case you need to remove the extra contribution that you made, or you'll be paying the 1% tax every month on the extra amount. You can check your contribution room on the CRA website under My Account Services. Number two, if you day trade in your TFSA account. A TFSA account is supposed to be a tax-sheltered savings account for investment purposes. Day trading is not considered an investment for your future. It's more like a business. So if you get audited by the CRA, you'll most likely be asked to pay tax for those trades. So what is considered day trading? Some criteria that might help determine that is how often do you trade, how long do you hold on to those trades, and are you buying low and selling high for a profit on a daily or a weekly basis? The TFSA account is meant for you to use as a personal savings account and an investment for your future. Day trading can be considered a business income even if it's in your TFSA account. And 100% of the money that you make in these types of trades are subject to tax. It's considered to be just like a regular taxable investment account. There has been cases where the CRA asked individuals to pay money that is made in their TFSA accounts, which CRA considers to be day trading. Ask yourselves the same questions that I asked earlier. Are you day trading? You should probably not do that if you don't want to pay extra tax. Every activity that we do on an investment account is recorded by the brokerage, and they produce a T5008 form which needs to be submitted with your taxes. CRA has all that information. So if one day CRA picks up your form and they deem that is taxable income, you either have to justify it or pay the taxes. So it's best to stay away from day trading in your TFSA account. Instead, buy and hold for a long-term period. What I like to do is buy and hold well-known Canadian dividend stocks and Canadian ETFs. For example, XIC, which is the S&P TSX Capped Composite Index, it holds the top 250 Canadian companies. This investment helps with diversification as well, because this ETF contains stocks from all different sectors. As always, make money work for you, not the other way around. You can check out Wealthsimple Trade and get started with investing today. I have another video that walks you through the setup. I will leave the referral link in the description box below. If you use that link to sign up, fund your account $100 and buy some stocks with that, you'll receive $10 and I'll receive $10 as well. Let's take personal finance into our own hands and make our money work for us. If you enjoyed this video, smash that like button and hit that subscribe button for more videos like this.